You mentioned maybe earlier or on our pre-call talking about governance risk, and that you had some type of an assessment to look at those risks. Can you speak to that?
I may have been talking about the V360 program, which is our
Oh, okay,
strategic
yeah,
roadmap, which has
yeah,
an element for risk management, because one of the areas really within risk management is your governance.
okay,
Because you can't just set yourself up as a C Corp or a partnership or whatever. You actually have to follow the rules
hmm
that those entities require, or you can be, discarded. It can be looked through as if you
hmm
don't have the protective corporate envelope that you set out to have.
yeah,
So you need to have those board meetings. You need to document those major decisions. You need to treat the company like a company and not your checkbook. Of course, that would be for a smaller company, but you'd be
yeah,
surprised. Maybe you
sure,
wouldn't be surprised how many companies I've seen of substantial size that still have
yeah,
some problems with that. And so it's very important to pay attention to what good corporate governance is. Again, I'm not a lawyer. Sometimes we'll bring the corporate lawyer in to work
mhm,
with the company board if we see a problem in that area. But that's something that your buyer down the road, and frankly, anybody who's doing due diligence for any kind of transaction that might be happening along the way, they're going to
mhm,
be looking at those documents. That's part of the normal requests that come. So you
right,
should be prepared.
yeah, for sure. Um, talking about using it as your personal bank account, it's funny because I wouldn't be surprised because I've seen a lot, but I think a lot of people would that haven't had the chance to look behind the curtain on a lot of companies, how big of companies still operate without legitimate books and governance in place and these type of things. And those are kind of the ones that I'm referring to that end up with toxic cultures and bottleneck CEOs and those kind of things. It's really funny that in a free market, you can bring a product to market, and if it is a really good fit and the need is strong, and sometimes it can be government contract, it can be something that is just a plug and play solution, and it doesn't really take all of the branding and the thinking about strategy. It doesn't take any of that. It's just really there's a buyer, and you're the seller, and there happens to be a really high margin in what you're selling. Those people can make a lot of money, right? And these companies make a lot of money, but and you can kind of be blinded by how much money they're making. But after you kind of put that aside, and that's why I'm glad we're having this conversation, because the financials, they tell you a lot, but they don't tell you the whole picture. Because if you put all the money aside and you look at how the company's being run, and the type of people that are working there and how they're working together, and structure and systems and governance and all of these things, you really start to see what is really going on. And sometimes that could be a really good thing, but sometimes it's not.
Well, and you don't want to be the company where it's not and you didn't know it before
Yeah.
it was discovered. And any significant transaction is going to involve some significant due diligence, and they
Yeah.
look at everything. And so it's important. That's very important.